But first, no surprise that after that inflation spike last week, the Reserve Bank today was forced to increase the interest rates, the cash rate, from 3.6% to 3.85%. Joining me now, Judo Bank Economic Advisor Warren Hogan. Well, Warren, no surprises here. She didn't criticise the government directly, but if you read between the lines in the governor's remarks, she's clearly frustrated. Have a listen.
I've heard the Treasurer say is that he is focused on inflation. It's his number one thing he's focusing on at the moment. So I think he's conscious of it. But I think we can work. I think the idea that somehow we work hand in glove is not the way these things work. We are independent, they are independent, and we work with what we've got.
All right, give me your read of these things.
Yeah, well, I think she's essentially saying that it's a bit clumsy. These are very heavy-handed tools, whether it's interest rates or many elements of budget or fiscal policy. And really what she should be saying is the Reserve Bank is the tough cop on the beat who is meant to respond to the conditions they face. And yes, they should coordinate with government, but if the government is overdoing it, then they need to respond. And you could argue today was that, and that their independence is allowing them to do that. But she's certainly making sure she doesn't upset the government or upset the Treasurer. And she's walking a fine line for her credibility, because I think it's pretty unanimous now that with this strong recovery in the private sector in the second half of last year, we just don't have the space in our economy for our governments to be growing at the pace they have been, and they need to cut back on their spending. And that's the universal message from economists. And she probably can't say it that plainly, but of course the numbers bear it out, and that's the reality of the situation.
And look, that's what Joel Fitzgibbon said, a former Labor cabinet minister, on Friday. You know, big behemoth government, he's talking federal and state there, are displacing the private sector in the market. Government spends big and it's taking people out of the labour market and into government jobs. And they're also, with some union activity, trying to shut down resources and other parts of the productive economy where we pay our own way as a nation. I guess I'm worried. I look at this March state election in South Australia. We've got one in Victoria in November. When she talks about government spending, she's talking about state and federal government spending. And I suspect the vote handout buying, actions of those two Labor governments will continue and make things worse.
Yeah, and that's really important right now, Peter, because I would put forward the question, if a 4.35% cash rate, which we saw at the high point in 2024, did not get inflation under control then, why would we think it would do it in 2026? And of course, that's another 2 rate hikes after today's. And the answer to that, if you want to try and limit the scope that the RBA will have to raise rates, then the governments of the nation need to play a role. So it's nicely timed, and I think the strategy from a tough cop on the beat would be to signal they're going to raise rates back to where they were by the time of the budget season in May. And then if the state and federal government budgets show some restraint, maybe we'll get away with a peak cash rate of 4.35%. But if they do not, we may have to take the cash rate to 5% or worse. And of course, that's when we're getting into uncharted territory. And of course, that's when we bring in the risk of a much more damaging downturn in the economy. That's the way I think, that's the reality of it. And I really would like to see that.
I think she's got to be tough. I agree with you.
Do it.
I think she has to set some sort of benchmark, and I think she has to, by doing that, sort of expose where the government had choices and where they pulled the wrong rein by increasing spending or continuing to spend at the rate they spend. Someone said to me, Warren, that the reason why those earlier rate increases, people survived them, is they sort of just dug in, they maybe got a bit of extra over time, and they had some residual savings coming out of COVID. They don't have that now. And if there is this talk of another 2 hits this year, the rest of the world is not increasing their rates. Australia alone is really increasing their rates. What's the sort of the politics of that?
Well, the politics of the move today and what you just referred to is that the government cannot blame international conditions. I mean, it was always overstated in their narrative. But right now, global inflation is not low enough. It's still above 2, which is where most central banks want it, but it's broadly going sideways, whereas it's clear that ours is picking up again. Now, in my mind, this is a result that we did not tighten up macro policy enough. And macro policy is, of course, both interest rates, monetary policy, and fiscal policy. And my view remains that if we get both policy levers working, it gives us our best chance of getting rid of inflation without a downturn. But if the governments of Australia refuse to participate and tighten up their fiscal policy, then the Reserve Bank's going to be left with a tough job. And the problem today is that the governor came out and hiked, and they've got some very hawkish projections, but she was actually still pretty softly when it came to the press conference. And we're seeing the RBA now forecasting inflation above target for another 2 years. That will take it to almost 8 years of above target inflation. The question has to be asked, are we serious about inflation control in this country? And of course, if the governor wants to be serious about it, she needs to get on with tightening if the governments of Australia aren't helping her out. And alternatively, we could leave ourselves open to a position where inflation really gets away from us, like it did in the late 1980s, and then they just have to push the economy into recession. And that is a disaster for this country.